Your phone knows where you sleep. Your bank knows what you buy. Your government knows who you talk to. Now imagine they merge those three powers into a single button. That button already exists. They call it a central bank digital currency. And when they flip the switch, your money will expire if you don't spend it fast enough. Your wallet will shut down if you donate to the wrong cause. Your ability to buy food will depend on whether you said the right things online. This is not speculation. This is infrastructure already being built in over 130 countries, representing 98% of global economic power. The cage is ready. They are just waiting for you to walk inside. The trap is older than you think. Go back to 1942. The United States government created something called the Office of Price Administration. They issued ration stamps and tokens to every household. Red tokens for meat, blue tokens for canned goods. You needed both the tokens and cash to buy anything. The tokens had no value on their own. They were permission slips. The government decided what you could buy, when you could buy it, and how much. They called it wartime necessity. But here is what they do not teach you in school. The system was not designed to end when the war ended. It was a test. A test to see if citizens would accept programmable money. Money that only works when the state allows it. Money with rules baked into every transaction. The tokens stopped circulating in 1945, but the blueprint survived. Fast forward to 2022, Canada. Thousands of truck drivers protested vaccine mandates. They parked in Ottawa. They honked their horns. The government's response was surgical and terrifying. Prime Minister Justin Trudeau invoked the Emergencies Act. Within hours, over 200 bank accounts were frozen. $7.8 million vanished from people's lives with no court order, no trial, no warning. Derek Brower, a truck driver, woke up to find his personal account frozen. His business account frozen. Even a third unrelated account frozen. His truck was seized. He did not know where it went. He could not pay for food, could not pay rent, could not access his own money. The government labeled him a threat. The banks obeyed without question. Insurance companies cancelled his coverage. This was not a criminal penalty. This was financial execution. And it happened in a country that calls itself a democracy. This brings us to stage one of the trap, the lure. Every dictatorship in history has sold itself as safety. The sales pitch for central bank digital currencies is smooth. They promise convenience, faster payments, lower fees, financial inclusion for the unbanked. They say it will stop money laundering, stop terrorism financing, stop corruption. The language is soft. The intentions sound noble. But strip away the marketing and look at the machinery. A CBDC is government-controlled programmable money. It lives on a digital ledger. Every transaction is visible. Every wallet is traceable. Every dollar has a serial number that never fades. And unlike cash, it can be edited remotely. It can be restricted. It can be deleted. Your money becomes conditional. And the conditions are written by people you did not elect and cannot fire. Stage 2 is dependency. This is where they replace what you already have. Cash is dying by design. Governments claim it is consumer choice. They point to credit cards and mobile payments, but look closer. Sweden has almost eliminated physical currency. Stores refuse cash. Banks charge fees to handle coins. The elderly and the poor are stranded. In Nigeria, the central bank launched the eNaira in 2021. Adoption was dismal. Less than 1% of citizens used it. So the government created an artificial cash shortage. They pulled physical naira out of circulation. They redesigned the notes. They told people the new bills would be limited. Riots erupted. People could not buy food. Markets collapsed. Lines outside banks turned violent. The central bank governor smiled and called it a success. Why? Because CBDC adoption jumped from 0.5% to 6%. The lesson is clear. They do not need you to want it. They just need to make everything else unavailable. Stage 3 is registration. This is where anonymity dies. In India, the Reserve Bank is piloting a digital rupee with tiered access. If you want to use it, you must provide a passport photo. Your name, your birthplace, your date of birth, your address, your phone number. That gets you a 20,000 naira daily spending limit. Want to spend more? You need biometric verification against national databases. Every rupee you spend is logged. Every transaction feeds into a system that knows exactly who you are. The central bank's own documents admit that anonymous payments are incompatible with anti-money laundering rules. Translation: privacy is not a feature. It is a bug they are removing. In China, the digital yuan is tied to social security cards, the same cards that track your social credit score. Bo Li, an official at the International Monetary Fund, said it clearly at a conference in 2022. He said CBDCs allow governments to program money so it can be precisely targeted for what kind of people can own it and what kind of use this money can be utilized for. He was not speculating. He was describing existing policy. But here is the part that makes the cage invisible. Stage 4 is programmability. China tested digital yuan vouchers in Shenzhen with an expiration date. Citizens received free money. But if they did not spend it within 2 weeks, it vanished. 90% of recipients spent it immediately. The government called this a success. They said it stimulates the economy. But think about what it actually does. It removes your ability to save, to plan, to prepare. Your money becomes a melting ice cube. Spend it now or lose it forever. The Indian Central Bank published a concept note exploring the same feature. They wrote that tokens may have an expiry date by which they would need to be spent, thus ensuring consumption. Read that sentence again. Ensuring consumption. Your money does not belong to you. It belongs to an economic model. And if you refuse to participate, the system simply erases your wealth. This is not currency. This is a digital leash. Stage 5 is restriction. Once they control the rails, they control the destination. The code can specify what you are allowed to buy. Wikipedia's entry on CBDCs lists the risks clearly. A government could program money so you cannot purchase alcohol on a weekday, cannot donate to a non-profit they dislike, cannot buy more than a certain amount of gasoline. The digital euro proposal includes provisions for automatic fines. If you speed, the money is deducted instantly. If you miss a tax payment, it is taken before you see it. There is no appeals process, no court. The algorithm is judge and executioner. In China, the digital yuan is integrated with the social credit system. If your score drops, your wallet limits tighten. You cannot buy plane tickets, cannot book hotels. Your children cannot attend certain schools. This is not a conspiracy theory. This is documented policy. The system punishes dissent by making it expensive to exist. Stage 6 is irreversibility. This is where the trap locks shut. Once cash is gone, there is no escape hatch. No black market. No barter system that functions at scale. Every transaction requires permission from a centralized server. If that server says no, you are economically erased, and the server does not need to explain. In 2021, the IMF published research praising CBDCs for giving central banks more direct control over the money supply. They can issue stimulus directly to citizens. They can impose negative interest rates. They can delete money from existence if they decide there is too much inflation. What they are describing is a financial operating system where you are not the user, you are the subject. And the operating system can be updated at any time without your consent. The rules can change mid-game, your savings can be taxed retroactively, your spending can be audited in real time, and if you complain too loudly, your wallet stops working. This is not theoretical. Nigeria forced adoption through a cash famine. Canada froze dissenters without trial. China built expiration dates into the code. The infrastructure is live. The pilots are running. 134 countries are building this system right now. 3 countries have already launched. The Bahamas, Jamaica, Nigeria. None of them asked their citizens to vote on it. They simply announced the future and started building. The European Central Bank is preparing a digital euro. The Bank of England is researching a digital pound. The People's Bank of China has processed nearly $1 trillion in digital yuan transactions. The machine is warming up, and the global financial system is rewiring itself around centralized control. Here is the math they do not show you. Right now, inflation steals 3% of your savings every year. A CBDC with a built-in expiration date or negative interest rate could steal 10%, 20%. Whatever the algorithm decides, you cannot hide it under a mattress, cannot move it offshore, cannot convert it to gold without a digital record. The system knows everything. And once it knows everything, it can take everything. The numbers have changed, but the leash is exactly the same length as those red and blue tokens in 1942. The only difference is that these tokens live in your phone. And your phone is always connected, always watching, always reporting back. The banks are not resisting. They are collaborating. The Canadian Bankers Association testified that their members will follow all applicable laws and regulations. Translation: if the government orders them to freeze you, they will freeze you. No questions asked? In the United States, lawmakers introduced bills to block CBDC development without congressional approval. The Anti-CBDC Surveillance State Act passed the House of Representatives with a vote of 219 to 210. But this is a delaying action, not a solution. The Federal Reserve has already published research. The infrastructure is being designed, the international standards are being written. This is where the system turns deadly, not through violence, through silence. The dissidents in China do not get arrested anymore. Their wallets just stop working. They cannot buy train tickets, cannot rent apartments, cannot send their kid to school. They are not in prison. They are in a digital gulag where the walls are invisible, but the cage is absolute. This system is being exported. The Bank for International Settlements, the central bank of central banks, is running cross-border CBDC pilots. They are building the rails for global financial surveillance. A transaction in Tokyo will be visible in Washington. A donation in London will trigger alerts in Beijing. The walls between nations are dissolving. And in their place, a single unified ledger is rising. A ledger where every human transaction is recorded, categorized, and controlled. Here is what they are counting on. They are counting on you to believe this is inevitable. That technology always wins. That resistance is futile. They are counting on you to trade your freedom for convenience. To accept the surveillance because it makes checkout faster. To ignore the implications because the app has a friendly interface. They are counting on you to forget that money used to be a tool. And tools do not watch you. Tools do not judge you. Tools do not report you to authorities. But a CBDC is not a tool. It is a control system. And once you are inside, the exits disappear. The cage is open right now. You can still use cash, still make private transactions, still move money without asking permission. But every year, those options shrink. Every year, the digital net tightens. And the architects of this system are not hiding their intentions. They write white papers, give speeches at conferences, publish research in plain language. Bo Lee at the IMF said the quiet part out loud. CBDCs let governments control what kind of people can own money and what kind of use this money can be utilized for. That is not a payment system. That is a social engineering tool, and you are the experiment.